All right. Awesome. So how far would it go down? Let's take a look at that. This is where this isn't as important for indexes. Indexes is more just important to know when and where it's going to go down.
Right.
I'm still gonna look, just see where I think it's gonna go, but just in general, like you don't have to focus too much on indexes just to save yourself time in the future.
Yeah.
But so let's get first thing I want to do. Go here, and so just right off the bat, I remember in the last webinar we did, I was talking about how Fibonacci. Sorry, Jackson, I'm muting, so it's echoing a little bit. Fibonacci is what I use to predict take profits because of just how accurate it is. It's the same confirmations that what they call the banks, the institutions, the market makers. Those are the same confirmations that they use. Fibonacci is such a core fundamental of technical analysis that everyone uses it, and that's why it's so accurate. When everyone's thinking price is going to go the same way, it will go that way because all price is human emotion and thought. If enough people and the people that matter think price is going to a certain area, it will go there because that is who has the majority of what money is. All they're doing is playing a game, and we're a part of it. So I would say that price would go somewhere between the 786 retracement and the 886 retracement for a couple reasons. First reason is when price reaches the 618 retracement right here, which is the one kind of right past the middle. By the way, the 618 is one of the most common retracements you will see. But when you see price goes below it but retests it, more than half the time, price will then correct itself. The amount of the correction varies, but after that correction happens, it will then go past the 100 retracement. So when it goes past and retests the 618 retracement, that is an upcoming reversal indicator for you to go, hey, I think price is going to correct, or price is going to go reverse soon. This trend is going to continue. So I would think first stop would be here. And then from there, it could possibly go down to here. And I'm just saying this for a couple different reasons. First reason, 1272 retracement. It's a popular retracement. And again, these numbers don't matter. It's just these are the ones I've seen that have been repeated most of the time in my personal experience. So any Fibonacci level is a good Fibonacci level, but some just occur more than others. So that's just kind of takes a little bit of getting used to. So in the beginning that, you might not know which ones are good or not. Don't worry about that. You'll learn over time. Learning is making a bunch of mistakes in Forex. Learning is making bad trades. And exactly, it's good for measurements. So then another reason why I chose right here is because there's an untested demand zone right here. And what I mean by untested is that there's no data to back up that this will hold up, because price has not been here since. We do not know how price reacts when it will get back into the zone, so therefore it's untested. However, it does line up with the 1272 retracement or extension, and it's also, price likely returns where it was. This is basically a market structure with support, resistance, and even the newest of Forex traders know that concept. So that's what we see right here. So I want to get on to the other stuff so we can actually enter and look at trades to get into it. So all in all, I'm thinking that dollar is bearish, and that's why we're looking at here. So I like to write that down so I remember. I wrote down here DXY bearish. And the other one I'm going to look at just for further confirmation that this is true, and look at the Aussie. The Aussie typically does the opposite of the US dollar, because Aussie's main export is gold. And if you know anything about gold and the US dollar, they do the opposite. If the US dollar goes up, gold goes down. If gold goes up, USR goes down. That's how they work. It's kind of like pulleys on a chain. So because gold is the main export of Australia, they rise and fall together because that's where Australia brings in a lot of their money. So that's what I'm looking at next. The index for that is called AUS 200, AUS 200. So I was looking at this earlier, and in fact, I was looking at this last time I was hosting this call, and I'm thinking price is going to keep going up, and I'll explain why I think price is going to keep going up. So first, right off the bat, here is the last supply zone it passed through. Label it supply zone. Here we are. It already broke that. the next nearest supply zone is years back in history. Now, it doesn't matter how far something happened. However, the longer it happens, the more relevant it is. So while it is important, while it still does matter, it's just not as important as it would be if it happened more recently. So I'll zoom out just to show what I'm talking about. In fact, I don't think this is the highest it's ever been. Yeah, it hasn't been this high since February of 2008. So that is important to know, but it's not going to affect what's going on right now, especially because nothing was even going on there. It's just a huge price drop. So right now, price is free flying upward. So there is very little resistance putting on the Aussie right now. So lack of resistance means there doesn't have to be as much buying pressure to keep it going. So let's look deeper into the chart of why I think price is going to keep going up. So we can just look at the oscillators right here. There is divergence. However, I think this is going to be a fake out personally, because if we go to the ADX right here, they're not getting near each other yet. You know, they're still kind of expanding and it's going up. So that tells us that bullish momentum has not died down. It's still very much going up. The sellers still need to put in a lot of work to get there. So that's a strong reason I think price is going to go up. And when we're trying to decide whether or not price is going up or down, that's, you know, the battle we're playing. You want to count your confirmations and your counter confirmations. There will always be confirmations and there will always be counter confirmations. So in this case, this is just an example where I believe that counter confirmations are more prevalent in this example than confirmations of it going down. So another reason why I think price is going to go up is, first of all, there's very little consolidation going on here. In fact, it just breached its consolidation. It was consolidating right here. Price was taking a breather right here. However, it was taking a breather on top of supply zone, which means that the resistance it met was already broken. That means there's no lack of gravity putting it down and still going up. So all in all, I just don't think a reversal is going to happen quite yet. So I think the Aussie is still going down. So with that said, that would also go along with how we think the dollar is going down. Like I said, Aussie is affected by gold, and then US dollar does the opposite of gold. So this tells us this information right here is going to give us a huge edge when we actually now look at the different charts. It's going to we have huge inside information of which different currency pairs are going to do what. And if you're unfamiliar with cross-index analysis, since we know that the US dollar is going down, any currency pair with the primary currency of the US dollar is likely going to go down, and any currency pair with US dollar as its secondary pair is likely going to go up. And I'll explain that more in depth when we start looking at charts. I'm just going to look at a couple more indexes really fast before we get into it, just so that we know exactly what's going on with the main currencies that are traded, so that we don't have to stare at charts as longer. Because again, the point of trading is to make it so you don't have to work as much, so you have more time to do what you want. So this doesn't really become a job. It just more becomes a habit that you do throughout the week, and you don't mind because it's not that hard. It makes you money. It allows you to do what you want to do, and it allows you to not have to go to work. Like, I'm really hoping that I can do this full time by the end of this year. Like right now, I'm wearing my staff shirt right now. I was at work earlier today, so yeah, I'm still in my own sweat right now from that. So that's why I'm doing it. I'm doing this a lot less than I'm at work, but I make more doing this than I do at work, even though I spend less time doing this. So once I make enough to just afford to do my own thing, I decided to take this full time. All right, so now I'm gonna look on to.
It's a little small. I know printed index. I'm gonna look at that. This is a new section.
Hey, can y'all please mute all of your mics?
Okay.
Yes, please. I was trying to figure out how to mute everyone.
I want to see checks in the mail, so I can hear.
All right, how do we mute everyone? I know there's an option to mute everyone. There it is. All right, if you want to ask me a question, you can unmute yourself. Just feel free to do that. Just mute everyone so it's not allowed. Anyway, let's get back into it. So now I'm looking at the Japanese index. The Japanese index is called JPN225. Don't worry about what the numbers mean. I don't know what they mean, and I'm not really sure you can find the true answers of it online. Anyway, so we're going to figure out what the Japanese index is likely going to do this week. We can sit here and debate what's going to go on in the next few months, which is very useful to do. But in the sense of trying to trade, in the sense of what's going to help us make money this week, is we only have to worry about what's likely going to happen within this week. So that's why I'm not looking at the huge time frames. It's always a good idea to start in the monthly. We know we're trying to get your bearings and all that, but honestly, it's not going to really help us in this example, because I know in general that the Japanese yen is bullish. So it's light. So I don't, but in the grand scheme of things, I don't really care what's happening right here, right now. I'm caring what's happening this next week. So we know in general, price is bullish, but let's see what's happening more this week. So I'm going to start in a daily chart right here. And so when you're looking at a chart and you're just thinking like, okay, where do I even start to dig in? Start drawing some confirmations that you know. So right now, right off the bat, I don't really know what price is doing. So I'm going to start drawing on it to have some references. So first,
there's an M.
And yeah, an M's forming. We can see if that's a harmonic on a sec. Actually, let's check if that's a harmonic right now forming. These two highs right here kind of get me thinking it's not, because they're really a similar shape.
Well, wouldn't that be a Gartley?
Let's check. I'm not sure it's quite a Gartley. It's close to a Gartley. Let's see if we can try it from a different high.
Probably not.
Yeah, this right here is messing up. The ratio is they're too close to each other for this to be a harmonic. But an M is still an M. The theory still holds solid. So I'm just going to start drawing some confirmations on. I'm drawing a trend line just for reference point to see what's going on. So I drew this trend line. This trend line's invalid because the candlestick went through it already. I'm going to keep it here just as a reference, but this is actually just for educational purposes. I'll delete it. I don't want to be a bad example, so I'm going to keep this technically correct for this training call. So there's another trend line right here. This one already broke, but I just want to use it as a reference to see if price already retested.
Let me ask you something about that. Put that trend line back.
The incorrect one?
Yeah, the incorrect one. If you leave it and it is incorrect, but it was the previous correction, all that signifies is that breakout was a fake out. And then you just move out and you move it back up to the correction.
Yeah, exactly what you said. It was just a fake out. It's not ongoing. So we can put it right here. So now this is a valid trend line since it's only touching the wicks and not going through candlestick. So that's a really good point that William just made. So if you have an invalid trend line, you can just do that. You can just redraw it. So it is valid, and that's the proper way of doing things. So I'm going to put this trend line back right here, and we can see that the retest already occurred, and it happened really fast. We see, I'll zoom in just to explain what's going on right here. Price broke down right here, and then retested both the moving averages and the trend line at the same time. So this is a beautiful example of multiple confirmations stacking up in the same place to tell us that, hey, this is a valid trade. Hey, there's a lot to back this idea up. Because that's all we're looking for. It's not that, an experienced trader has this sixth sense of what's about to happen. No, they're just looking with their eyes, taking in the information and making a decision based on that. So anyone that knows what they're doing would see this and go, okay, I think this is likely a retest. And even right here, we see at this level how price has tested it a lot. We would draw a baseline right here. And boom, now we have 3 confirmations telling us that right here is a good place where price would retest and fall. So if this was an actual currency pair, something we were trading and we caught in the moment, this would be a fantastic entry position. A good entry position is when you see the confirmations actually occurring. It's not like, okay, first confirmation happened here, next confirmation happened way over here. And then no, confirmations, the closer at the same time they happen, the more accurate they are. The best entry is when you have as many confirmations at once as possible. So that's how you find a good position to enter. So with that said, I'm still trying to figure out where I think the Japanese yen is going to be going this coming week. The Japanese yen is really hard to predict for one really simple reason, is that the Japan's central bank they can manipulate price at will, which means they can artificially change the price of their currency with no warning. In fact, they don't warn you about it. And so if you're trading Japanese yen and you see a huge hiccup in price out of nowhere, you're thinking, why did that happen? It's out of your control. The government, the banks, whoever makes the decisions, I don't know who does that, decided to change price. And so that's what makes this pair very volatile. Sorry, what was that?
How can they? Sorry, man, I didn't interrupt you, but how can they do that?
How can they do that? Increase the value of their own currency?
I mean, like, yeah, and like just kind of like manipulate the market like that.
I don't know the exact way they do it, but an example of how it's possible is just suddenly exchanging a lot of just exchanging how much currency they own of it. But like I said, they're artificially doing it, so it might just be as much as typing numbers into a computer. That's
Okay.
how much control they have over their own, economy.
Okay, got it. Okay, thanks, man.
Yeah, sure thing. And guys, don't be afraid to ask questions. That's what we're here for. We're trying to learn together. I'm just trying to explain what's going on the chart as much as I can, just to get you in the side of what a trader sees when they're looking at a chart, so that you can start thinking the same way. All it is just repeating the same process. It's just analyzing, looking closely. So
how often does that happen with the Japanese yen? Like, is that something that happens a lot, or is it like, it's just like once in a blue moon?
Oh, it happens a lot. It happens almost every week.
Oh my gosh.
Yeah. So that's why a lot of people don't really scalpers really like the Japanese session because of that. Because when price gets put really out of balance after the initial spike happens, scalpers that know what they're doing can ride the wave back to where it should be. Yeah.
I'm listening.
Yeah, it's got a lot of people's attention right now. Anyway, I see a zone right here. So this is right now it's technically considered a supply zone, and I'll explain why this is considered a supply zone. So the reason why it's considered a supply zone right now is that price in the moment right now approach from underneath. So when a zone is above, it's considered supply, and when it's below price, it's demand. So when price was up here, this was technically a demand zone, and then now it's under it. Now it's a supply zone. So all it is vocabulary. Still same concept, behaves in the same way. It's just a very technical thing of, okay, now it's considered a supply zone, or now it's considered demand zone. Don't worry about it. Get confusing the terms. It works the same way. So it just re-entered into right here. So now I'm going to go in to see if where price is likely going to retrace to. So I'm looking more closely. So right here was the last low, and then it formed a new low right here, which tells us price is now in a downtrend. So what's likely going to happen from here is price is going to retest to a certain point, and we can try to figure out what point that's going to be, and then it's going to continue going down since this new trend has begun. So let's figure out where we think price is going to retrace to. So again, for any retracement, for any correction, prediction, I bust out the Fibonacci retracement tool right here. So right from the start, I see a zone where price is likely going to bounce to. In fact, I can narrow it down a lot right here. I think price is likely going to go up to around from here, kind of in the middle from right here. It's going to go up about that much, right in between the 50 retracement and the 6618 retracement. Now, here's a few reasons why I'm thinking that. First reason is, let's look at this supply zone it's in. What the supply zone demonstrates or shows to us is price is likely not going to stray too far from it. So price might peak out of this zone. It's not impossible for that to happen and it'd still be valid, but I don't think it would do more than peak outside of the zone. Now, if it breaks out of the zone, that's a different story. It tells us something else. But what's likely going to happen from here with the other confirmations line is I think price is likely going to peak out of it. In fact, I'm going to move this supply zone slightly to make it a little more current, because again, I drew it from back here, but the further things happen, further back in the past things happen, the less less priority they hold for what's about to happen. So I'm going to fix it to more of what's happening right here. And I think right here is a good place to put it. So I think price is likely going to go kind of around here-ish right in between the 50 and the 618 retracement. And those are confirmations in themselves because if you remember, like I said earlier, the 618 retracement is one of the most commonly occurring retracements you'll see. But since this is a reversal happening right here, I don't think it's really gonna get much far past the 50. In fact, there's a chance it might not break that far past the 382 where it is right now. Because when it is a short reversal, when it's likely a continuation, it will only be in the shallow retracements. So again, that's price behavior. Start to figure out what mood price is in. So if it's a shallow retracement, that means price is likely going to continue. But it's a deep retracement, you can think to yourself, okay, this might actually be a reversal. Price might actually reach into the extensions. But in this case, price just formed a new low, which is telling us price is going to go down. Price broke this trend line, and it's just retesting right now. So I think we're going to reach a shallow retracement. However, that tells us that price is likely going to be going up this week. So with that in mind, I'm saying that the yen is likely going to be bullish this week. Now, does this mean that Japanese pairs are going to be bullish? There is a slight delay in some pairs. There's a lot of factors that go into exactly when a certain currency changes. Again, it's all based on human emotion that is then put through a computer, that is then spread through the world. So it's not even just economic factors. It's just kind of like how, the path, at least the path of how this information travels. So that's a big part of it. How can you tell when price is just going to, I think the right term is consolidate. So we can't predict if price is going to consolidate. We just more identify that price is currently consolidating, because sometimes price just kind of pivots all of a sudden. Sometimes there's a very short consolidation. Sometimes it's a really long consolidation. I don't really know of a way where you can go, okay, price is going to consolidate right here. It's more of you're looking at a chart and go, okay, price is consolidating right now. So for example, if we're looking at a chart, like right here is where price was consolidating right here. So if we're just looking at the chart right when this is happening, we think to ourselves, price is consolidating. And so, but we didn't predict it. We just can recognize that it is currently consolidating. So I hope that answered your question a little bit. Can't really predict consolidation, more of just recognize when it is consolidating, because when price is consolidating, that changes it. That changes what the market behavior, that changes what kind of trades, or if you'd even make a chain trade, that can even be a counter confirmation. So that's a very powerful thing to recognize right there, and I'm glad you brought that up. But like I was saying, this doesn't indicate that this movement's going to happen right in the Japanese pairs. Since in general price is going down, Japanese pairs might just be taking that bullish direction in itself and still keep going down. So these little micro movements aren't quite as prevalent in indexes. So if I'm going back to like the dollar index is going to make a heavy move downward, and that affects a lot of different pairs. So I think price is going to be a lot more reactive to that with different currency pairs. Same with the Aussie. The Aussie's been going up, and I think it's going to continue going up. Therefore, I'm confident that the Aussie itself, the Aussie currencies, will go up too along with that, just because the bullish momentum has been going on for so long. It's been in control. It's taking lead. But in this, bearish momentum is the primary movement going on right here, and it's just starting a bullish correction. So that's why I feel like this may not be as important as the other ones we're looking at. So with that said, I'm going to go into actually looking at some currency pairs. So we might find some trades. Now, Sunday is not the best day to enter trades, especially if you're new to trading. Like I was explaining earlier, there's a lot of market manipulation. Your trades will go into drawdown. So Sunday is not the ideal day to be trading if you're new to it. But we might find some good potential trades coming up. I will tell you if I decide to enter a trade, but I will give you the full warning of I expect it to be in drawdown or not. And what I mean by that is, do I expect it to be in the negatives for a while? And when I say negatives, sometimes I'm down a few $100 and I'll stay there for days to weeks at a time because I'm confident in my analysis. I know that price will eventually be in my favor. And sometimes it takes a few months. Like for example, there's one guy, one new person to Forex, and I was talking to him. Amy introduced me to him, and I told him to enter in these positions. I told him, I want you to put a sell on these currencies. And so, and the point why I want him to do that is because he's having trouble staying in a position for extended period of time. He would see that he's in a loss, close it out, take the loss, being a little impatient, which is completely normal when you're new to trading. So I had him enter these positions, and I told him to not check them until I tell him to. That was weeks ago, and I'm still not telling him to open it yet because those trades are still playing out. So it might be a month or so from now, but eventually I'm going to send him a message, tell him to check his trades and see, hey, look, you didn't look at these trades for weeks or months, and now you're in profit. So that's why patience is really important to execute here. I know this isn't stocks. This isn't the New York Stock Exchange. We're not investing in something slower pace. We're investing in the fastest moving financial market there is, right next to cryptos. But we'll look at a little bit of cryptos today. So then patience is really key right here. So first pair I'm going to look at is the Aussie versus the US dollar. So I was looking at this before I started this call, and I see two options right here, and I'll explain why I'm thinking these things. I'm seeing a buy right here with the Aussie. And again, before we even started looking at the chart, why do I think it's a buy? Remember, the Aussie is going up, the US dollar is going down. Two confirmations that this pair is already going up. So why is it, if the US dollar is going up or going down, why would it make this pair go up? Because the US dollar is the secondary currency. So what I mean by that, I'll type them out right here. Primary, Aussie, secondary, USD, and I'll make this big so we can see it. All right, so the primary currency in this pair is the Aussie. So whichever direction the primary currency is going in means the same direction of where this pair is going. So if the Aussie is going up, it's a primary currency. That means this pair is going to be going up. Now, if the Aussie is going down, because it's the primary currency of this pair would go down. Now, the secondary currency is exactly the same, but it's the opposite of it. So since the US dollar is the secondary currency and it's going down, this pair will do the opposite of what the secondary currency is doing and go up. So right now, the US dollar is going to be going down, so it's going to shoot it up. Now, if the US dollar is going up, it would make this pair go down because it's the second currency, because it would do the opposite of what's going on right here. So that's how cross index analysis works. And it's an extremely powerful tool. It's not that hard to use once you get better at trend or recognizing trends, which really isn't that hard. It's a really basic core concept of just recognizing higher highs, higher lows, or lower highs. That's all it really is. So I'm going to explain what I have drawn on this chart right here. So I have a demand zone right here. I'll label it demand zone. Boom, make this a little smaller, demand zone. And so again, to explain briefly what a demand zone is, it's where volume is stored. The way I recognize this was I found a swing low, which is right here, and then I drew it from here, and I saw that it was retested right here. Price then tested again very accurately right here, which tells us this is now a tested demand zone. So before any of this happened, this was just an untested demand zone, but then price entered through here, bounced around in it, consolidated within it, showing us that this is a valid demand zone. So that's why I have it on here. I'm using it as a reference. It tells us good information. So there's a demand zone. And so why is the demand zone telling us the price is going up right now? Because price has already left the demand zone, and it's just going further and further away. So it has been rejected by the demand zone, which is telling us price is going up. If price chose to stay in it and broke below, that would tell us that price is going down. But since price went inside, bounced around, shot right back up, that's telling me that its price is likely going to be going up from here. So that's one reason why I think price is going up. Now, another reason I see is because I have this trend line right here, drawn right here, descending trend line. Price then broke right here. There hasn't been a retest yet. I don't think price is going to retest this trend line right here, but that doesn't matter in this example. Again, the steeper the trend line is, the less applications we have with it, the weaker the trend line essentially is. So since it broke the trend line, that's telling us that the direction of the trend is moving. Buying pressure is going over selling pressure. The bulls are beating the bears in this game of tug of war. So that's another confirmation. So now we're up to 4 confirmations. We have the 2 indexes telling us it's going up. We have the demand zone rejection telling us it's going up. We have the trend line breaking telling us it's going to go up. Let's find some more confirmations. So now if we're looking at the moving averages right here, price has moved above it, which is a confirmation itself when price is above the moving averages. And if you don't know what my settings are for this, I have a simple moving average set to 21, and I have an exponential moving average set to 9. That's kind of the industry standard for using the moving averages with this application. And again, why is it important to use the industry standard? Because that is what the market makers, the institutions, the big players in the game are using. So I encourage you to experiment with your own settings. However, just keep in mind that's not what the experts are doing. So there's a lot of uses. You can move around the moving averages, like if you set it to a higher one, like setting it to 100 or something, using a support resistance, do it. But if you want, the best way, in my opinion, of using moving averages is like this, with having one set to 21, one set to 9, industry standard right there. Anyway, getting back to it, when price is above the moving averages, thank you for whoever circled that right there. That means its price is bullish. Now, if price was below the moving averages, that means price is bearish. So we have one confirmation from the moving averages that price moved to bullish. The second confirmation I'm waiting for right here is for these to cross over. I want the red to go above the blue. And very just in simple terms, that means buying pressure or the buying momentum is above the selling momentum. So that's the last confirmation I'd really be waiting for. So let's take a look at our oscillators now. There's divergence right here, and what divergence really is we can see price on the chart was forming lower lows, but price on the oscillators was forming higher highs. So
you want to do me a favor, Jonathan? You want to zoom out a tiny bit?
Sure. More?
Yeah, a tiny bit more. Is this the pair that we've already decided that this wasn't a harmonic pattern?
Oh, like right here, this M?
Yeah.
Yeah, because the tops are too similar, and this just goes a little too deep.
Right.
But it's good. It's close. Like, that's a good thing to do is even if you have any suspicion to harmonic, test it, compare it to your notes, see if it is, because that's how you learn. You're not going to start off immediately recognizing the correct ones. You're going to start recognizing just the general shapes. You'll recognize the M's. You'll recognize the W's. But that's how you recognize it. So anyway, back to what we're looking at right here. So we see divergence. That's another confirmation. How many confirmations up to? 1, 2, 3, 4, 5, 6. That's our 6th confirmation. And again, 6 is the minimum amount of confirmations, but we're going to look for more. We see the MACD crossover up to 7 confirmations, so that's looking really, really good. So what are we waiting for to enter this trade? There's 2 reasons why I'm not telling everyone in here to enter this trade right now. The first reason, it's Sunday, which means price can get whacked real fast, and we don't know in which way it's going to get whacked. Second reason is I think there might be a better entry coming up. So if we go into a smaller time frame right here, I'm thinking right here is where the ideal entry for this would be. So I already kind of wrote down where that is. Make this a little bigger so you can see it. Looking, so you could put a buy limit right here at 0.74375. It's always better to wait and watch the chart while it's happening to enter it, opposed to just taking that leap of faith and going, it'll be good, because sometimes it's not. So that's why pending orders are a little riskier than live execution. It's a tool to help you catch trades, but it's also, kind of a crutch. If you use too many crutches, you're gonna fall. So 2 things I'm personally doing here. I entered a buy position already, and that's because I am completely fine with there being 100 pips in the wrong direction for me. I'm okay, and I can afford to, and I'm not going to stress out if I see that I'm a few $100s in drawdown from here, because there's a potential 150 pips to be made from this, which would be almost $1,000 for me at the lot size I'm trading. So I don't that's worth it to me. I'll take $300 a drawdown if I can make $800 in profit. So that's how you kind of look at it. Are you willing to be, if you have a smaller account, are you okay with being $8 in drawdown to make $16? Are you okay even, with being $2 in drawdown to make, $3? Like, you have to compare those, ask yourself. What were you saying about price going above the moving average line like here? When price is above the moving average, that means price is bullish.
You covered it after I actually sent that, bro.
Oh, my bad. I just
No, you're good.
All right. So again, kind of what I'm doing right here with this is I have a buy position currently open. That doesn't mean that, or like I said, there is risk in entering in that right now. So I will call out that trade in the future if I choose to enter it. But right now, it's not looking like the best place to put your money if you don't want to be in drawdown. And I'm just checking my chart. I forgot I'm in one trade, so let's check out this next trade that I'm currently in. Hopefully, some of you guys are still in because it just dropped a lot. It just dropped huge into profit. Like I'm up $130 on this trade right now. We call it, this is the Great Britain odd US, or the pound Aussie trade. So just shot into profit. Things are still looking good here. Things are still looking in our favor. I really hope you guys got into this trade because we're in deep profit right now. In fact, are we able to put it? How many pips in profit are we? Let's see if we can move the stop
I
loss.
entered that not that long ago.
We're 70 pips in profit. Sorry, what was that, William?
I re-entered that like not too long ago, like today. Like I caught it last week, but I entered it.
Nice. Are you in profit right now?
Yeah.
Nice. All right. So actually there's not a lot to look at right here. It's looking good. So if you currently are not in this trade, this is not a good time to enter since the movement's already started. It's kind of past where at the entry point of this trade. So there's a point where you can safely enter a trade, and then there's a point where you just shouldn't enter the trade anymore, even though it's winning, because a lot of times we don't know how much it's going to keep on winning. So just to be safe, if you're not in this trade already, don't enter. If you're already in this trade, enjoy the profit. So now I'm going to look at Euro USD because I was looking at potential trade coming up, very similar to the Aussie US dollar right here. So there's a bullish crab right here, which I think is kind of funny because there was a bearish crab on the dollar index. But anyway, price was shot up from this demand zone, which again tells us that price is going up. It broke this trend line, broke this baseline. The moving averages crossed over. Price went above. Looking at the oscillators, it's MACD is looking bullish. The ADX just crossed over, waiting for it to go back up. So kind of explain what I have going on this chart right now. This green line right here, the 786 retracement, is where I'm thinking of putting in a buy, or not what I'm thinking of putting in a buy. This would be my take profit. So there's two options we can do from here. First option is we can put in a pending order. But again, remember, pending orders, first of all, might not get hit. And if it does get hit, the conditions may have changed. But just as a reference, if you want a safe entry on this, right here you can do that and try to catch 200 pips, put this baseline. So I'll put in the coordinates of where that is up here. So the coordinates of, I'll put a slightly different one. Entry, just be safe. I'll put it like right here, so it's a little more likely to get hit. So the coordinates for that, I'll paste it right here. Okay, that's a really easy one to remember. So it'd be right here. In fact, let me put that in the group chat. Type that out right here. So Euro USD, buy limit, entries at 1.1700, 0 for one of the zeros, stop loss. All right, so stop loss for this, if we were to enter it, wouldn't be that bad. It'd be about a 90 pip stop loss. So if you're trading with a micro lot, that means at the very most you're gonna be down $9. If you're trading with a mini lot, you'll be down $90. If you're trading with a full lot, it'll be down about $900. So that's just kind of a point of reference of what risk we're dealing with here. So let me move this so I can see all the entries. So stop loss 1.16. Let's just put it at that to make it simple. Take profit 1.18920. All right, so I'm gonna post this in the group chat right here. Boom. Where's the other group chat at? There we are. Boom. All right, back to here. All right, so that's what I'm thinking. So what I'm personally doing with this, I'm doing the same thing. I already have a position open, but I'm willing to be in drawdown, and I'm going to put in a pending order where I said to put in a pending order. So that's two things. In fact, I'm putting that pending order right now, and I encourage you guys to do the same. If you agree with this analysis, I'm not a financial advisor, just an educator. But I'm trying to help you guys out, trying to just be open with the trades I'm currently in. So I have money on this too. So if this loses, I lose money too. I'm not trying to just go, oh yeah, do it, trust me. So that's kind of what I'm trying to do here, just trying to share where I'm currently at with a trade, or what I'm currently doing with the trade. So I'm gonna open that pending order right here. All right, done. Anyway, so that's that. We got 2 trades now. So now I'm gonna look at New Zealand dollar, US dollar. This pair, I think I was looking at earlier, and it's not really looking ideal, like the other ones are, because of just how it's laid out right here. So price has been going down, and it broke this previous low right here. From here and here. So there's a lot of bearish momentum driving price down right now. So I really feel like it wouldn't be a safe bet to put a buy on this right now. Now, the reason why I wanted to check this pair is because it's a US pair, it's a secondary. So since there's a huge US dollar movement, I wanted to check to see if this would be, anything. So price could move up from here, but just because of how long price has been going down, just taking that into account and just how it's been forming lower lows, I don't think it's a good idea to enter in a buy with this right now. So I'm not going to really bother and analyzing it right now, because again, time is precious. If you can recognize from the beginning that's just not going to be a good trade, save your time so that you can just move on to a pair that actually will help you make money. So now we're looking at, let me find the pair that looks interesting. I'm going to skim through a few pairs really fast. Here we go. So here is the euro versus the Aussie right here. So I was kind of thinking of putting a sell down here, but I'll explain what's going on this chart. So if you remember this from a few weeks ago, we found this double harmonic, which just basically means a harmonic with a harmonic and harmonic extension. And that ended up giving an extremely accurate reading of price just shot up right from there. I closed out kind of early, about halfway through this movement. Could have made twice the profit from this trade. But the thing is, you don't want to be greedy. I'd much rather take in, some profit than no profit, or taking in a bad trade. So that's why I'm okay with missing out on a few hundred pips, even though just saying that kind of hurts. A few hundred pips is a lot of money. But I caught about 300 pips, but in total moved about 600 pips. So 600 pips with a standard lot, that's $6,000. What could you do with $6,000 and making that within a very small period of time? That's the power of Forex. You can make that much money short period of time with not doing that much work. And it just doesn't really get better than that. So what I'm looking at here is, first of all, we have a supply zone right here, and it was rejected from it. It just kind of brushed it, and now it's going down. So what is that telling us? That means price is going down from here. Buying or selling pressure got to the buying pressure, and it's just starting to win the battle. So if you look a little closer right here, this trend line broke. It's at the retest. So retested at the same time, retest the supply zone. And like I was saying right at the beginning of this webinar, we want multiple confirmations to line up with each other. So we have 2 retests lining up with each other right here. So that's telling us, okay, this is a likely place that price is going to retest from. So if we zoom in more, I'm going to go into from the daily to the 8-hour chart. Let's take a closer look at what's going on here. And we see that this trend line was just broken. Now, when I say it was just broken, it really just broke. I was looking at this earlier today, and it was still intact. So what we're seeing right here is breaking below it. Once a new candlestick forms below it and then closes, I'll feel more confident about this as a break. Like we were saying earlier, kind of how I think it was William that said, there could be a fake out of a fake breakout, and this could be it. So I want to wait, give it more time, probably another day or two before I actually would go, okay, this is definitely broken or So that's where I'm at with this trend line. And then we also see these moving averages about to cross over. They've not crossed over yet. The crossover is not confirmed. It has not completed. But it's a good sign seeing that this is happening right when the trend line's breaking. So once we see that this trend line break is complete and the moving average crossover
Hey, John.
is complete, yeah.
Real quick, brother. Darren wants to know what the pip risk is on that one trade you did. Is it 90?
Sorry, what was the question?
The euro to US dollar. What was the pip risk?
Euro US dollar.
The one we just put in.
The risk, you're risking 90 pips. The risk reward ratio is 2.
Okay. Bet.
I'm missing out on the because I have notifications off. Anyway, where was I? Going back to we were at Euro Aussie. Anyway, so let's go back to where we are. Okay, so moving average about to cross over, trend lines breaking at the same time. Let's look at the oscillators now. So if we look right here, we see divergence was happening. So if we go on the chart right here, we see prices going up while on price, and then on oscillators going down, divergence telling us that buying momentum is slowing down. Same thing was happening on the moving or the MACD. So that's telling us that this is good. And then if you look at the ADX right here, the bearish momentum is about to cross over the bullish momentum indicator. So what I'm getting at here, the vibe I'm getting from this pair is that buying pressure is dying out and selling pressure is taking over. However, in this game of tug of war, buying pressure still has about an inch more than the sellers. So it really looks like the sellers are about to win, but they just quite haven't yet beat the buyers. So that's why I don't want to enter this trade yet. I want to wait at the at least another 12 to 24 hours before I would execute a trade on this pair. So even, tomorrow, midday tomorrow, I might look at entering a position on here because this, just get a short prediction of where we could be at right here. This could be a 150 pip trade. This could be a 200 pip or probably more around 100, 150 pip trade. So again, that's a potential few $100 right there. We just have to keep an eye on it. A big part of the battle, big part of the struggle is just remembering to check the charts. You can set reminders. You can set reminders on your phone. You can set reminders on TradingView. You can just write down notes. And the best way is just to make a habit of it. Make it so that you have a habit of checking the charts here and there throughout the day. My kind of habit is, well, first of all, my habit is to check when anyone asks me. So that's why I really like helping people. Is I'm more on top of it when you guys are asking me questions. Because a lot of times, if I'm not helping anyone, I'll get kind of lazy and stop looking at it. So thank you guys for keeping me on my toes. But another good way is, whether it's like right before bed or maybe it's before work, wherever you just have time, you can look at charts. Because when you're doing swing trades, it's not that important when you're looking at charts. When you're scalping, it's really important when you're looking at charts. So if you're more worried about not using a lot of time, you can just do swing trades, and you can do it when you can, when it's convenient, and it will make it so you have more time to do it as you get more successful at it. So right here's what I'm seeing that this is a good potential trade coming up, and I'll keep you guys updated in the group chats when I think is a good time to enter. So I think I'm gonna look at one more currency pair before I'll call it a day on this webinar, because we already have one trade I called out that's looking good. We have a potential trade coming up. You don't need a ton of trades constantly going to be a good trader. The most trades I really have ever opened at a time, like swing trades, is probably like around 6, and that's the very, very most. I am happy if I have just 1 or 2 trades open, because I know if I'm patient with them and they're a good trade, it will eventually go into profit. Right now I have 3 trades open. I have a couple pending orders open, so that is more enough that I personally need. If you want any trade, advice from here, have that pending order open. If you have enough room in your margin to be in drawdown, you can enter the Euro pair right now, or you can enter the Aussie pair. But again, you have to be okay with being in heavy drawdown. You have to tell yourself you're not going to freak out, and make sure you have enough margin to where you can trade around it, while you're holding it in drawdown, because it can take a while. So the last pair I'm going to look at, I'll find one that looks interesting. Let's look at this one. Let's look at least one exotic. This is my favorite exotic to trade.
Did you also want to look at some crypto too?
Maybe later this week, because cryptos are gonna be kind of whack when the market open, because they're just starting to settle in the position of where the other markets aren't moving, and now the other markets are moving again. So it's gonna be a little weird. So I just kind of want to let cryptos kind of like warm up. And also I just don't want to make this webinar too long, because again, like I like to keep it kind of short, make it so your brain isn't fried, because you can really get into the zone, but your thinking becomes less clear. You can be in the zone for hours and hours and hours without realizing your mind is turning into putty. So, because then I can kind of start feeling that happen with the way I'm talking. I'm slipping a little bit, so I don't want to be giving you guys kind of like inaccurate information. Anyway, so this is the dollar versus the Singapore dong. I think I don't remember what the currency is actually called. But the reason why this is a cool currency pair is because it moves with the dollar index very, very smoothly. And let's actually get those up to compare. So let's do the DXY, compare those. Look how similar the movement is. It almost looks identical right there. So that's why I love trading this pair, especially when something with the dollar index is about to happen, because it doesn't get closer than this. Like, this looks like a country right here. This looks like a continent with a bunch of little islands. Anyway, so let me get rid of that. And so what are we seeing right here? This is a harmonic. Let me double check which harmonic this is. This looks like it is a bearish butterfly. Yeah, this is a bearish butterfly. So that's one confirmation. We have supply zone rejection, which is another confirmation. MACD crossover. How did I compare the indexes?
Yeah.
So if you go up here on TradingView, at least, I don't know if you can do that. This would be better for. There's this button that says compare, and you can type in anything. You can pay, like, just I type in DXY. We can compare it to, you know, a different currency pair, like, and but that's how it works. Really it's a very useful feature. So anyway, right now it's not quite a sell for me yet. What I'm waiting for with this pair is I want to see a retest right here. Price is dropping. I think price is going to retest, and when it retests, I have a feeling it's going to retest against these moving averages once they cross over, because we already had the MACD crossover, which tells us that the moving average crossover is going to approach soon. And I also want to see the ADX start to crossover as well. So two things I'm looking for again right here. I'm looking for a retest, and I'm also waiting for these crossovers to complete. So those are the main things I'm looking for right here. So again, this is a potential swing trade that we might enter later this week. And again, that was the full intention of this call, is to look for swing trades. We already found, like, I think 4 potential swing trades. So that was really good. There's so many days where I go and look at charts and I find nothing. So this is actually a lot to find. That's just because we found the indexes in such a good position. We see the dollar starting to reverse. We see the Aussie just continuing, which is really good with income alongside this reversal. So this is a really, really good Sunday. It's a really good beginning of the week to find all these setups. So this is a very, very successful trading session right here. We have stuff to look at. We have stuff to look forward to. I'm going to keep my eye out and make sure we don't miss anything. And I'm going to host another one of these Tuesday night after do the training call and after the opportunity call. We'll host another one of these. We'll check these positions again. But in the meantime, if any trades happen or anything start to happen with the market, I'll call it out in the group chats. But do you guys have any questions before we hop off tonight? You guys are awesome. A lot of good questions, good points. Like William, you were killing it. Like explaining it to the teacups.
Sorry again. I hate interrupting you. I'm sorry, man.
All good.
To where back on the Euro to US dollar one pair, I know we have the buy limits to the 1700, but if you look at the ADX, it doesn't seem like it's going to slow down anytime soon on an hour chart, I guess.
That might be so on the hour. I'm making this prediction based off the daily, And when you're making a decision, you want to stay to one time frame. But that's not a point you brought up. I'm not going to shoot down the point you made. The reason why pending orders are inferior to market execution is they don't always get hit. So if what you're saying is, is going to affect what's going on daily, that means that this pending order may not get hit. But that's why I'm going to continually keep checking this. So let's say sometime tomorrow, I see it's not at the buy limit yet, but I think it's a good time to enter. I'll call out, a good time to enter. Even if you see a reason to enter, I would do it. Just the reason why I don't recommend entering right now is price is already on the move. You don't want to buy when it's already on the move because you could go to drawdown and drawdown hurts. But if it's shallow drawdown, that's a good thing. Or if there's no drawdown all draw, that's a really good thing. But this is just to be safe. This is just, replicating something that I've done a lot of times, going, okay, this would be a good entry. I can enter now, but I'll be in drawdown. So catching in the middle is probably the most ideal thing. So this pending order it may not get hit for all we know. It's unlikely. So, but I will keep an eye out for a good opportunity to enter, and I encourage you guys to also kind of keep an eye on it and, kind of see like, I think now's a good time to enter, and just kind of see if you're right or wrong. It's just about to
shall do. And I guess you're right because it hasn't technically retested on that trend line yet either.
Exactly. So there's a couple reasons why we want to retest. I don't think it's actually going to reach the trend line. It might, for all we know. But again, we keep an eye on it, and for all we know, it might actually go down a lot more. But again, we're just kind of playing it by ear. It's hard to say exactly when it's a good time to enter, but it's easy to say now is a good time to enter. That's kind of how I like to look at it. It's either now or we wait until now happens.
Gotcha. Okay, bet for sure.
All right, awesome.
That's it. I stay on the hour chart, so that's the only reason why I asked that.
Yeah. All right, but that was a good question. Does anyone else have any questions? Again, these are really good questions. It helps me learn too. Keeps me on our toes, and just talking about it, I learned from you guys so much. Everyone thinks in a different way. What was it don't walk in a room thinking that as the youngest person thinking the oldest person can't teach you anything, and don't look at the youngest person in the room thinking that they can't teach you anything. Same thing in Forex. Don't think the newest Forex trader has nothing to teach you, or at least a perspective that you can't gain from. But if you guys have any more questions, if you guys have any more questions, feel free to send me a message, personal message or in the group chat, either one. I'll get back to you. But you guys are great. Again, I'll host another one of these on Tuesday night after the opportunity call around the same time as this one. So thank you guys for hopping on, and I'll talk to everyone soon.
We love you, Jonathan.